Are Bitcoin ETFs the next big move or a disaster waiting to happen? As the financial world plunges into this fever, few understand the true hidden dangers. Why can these ETFs, which promise security and diversification, actually be the Trojan horse of the cryptocurrency market? How come regulators still can't decide whether they are the future or a direct threat to financial stability? What does it mean for your money when a simple investment becomes a roller coaster of uncertainty and risk? Let's reveal the dark side of Bitcoin ETFs and why they might not be what you think. Get ready for a journey that goes beyond the headlines, where the promise of quick profit hides risks that few are willing to admit. Enjoyed this content? Then don't miss out on the other videos on my channel. I'm sure you'll find something that catches your interest. And if you haven't subscribed yet, make sure to hit that subscribe button and turn on notifications. That way, you'll stay updated with all the new content and help the channel grow even more. I'm counting on you. Volatility risks. Bitcoin ETFs carry a significant danger. Bitcoin's extreme volatility. Every minute, Bitcoin's value can skyrocket or plummet, dragging down the ETF's price with it. For investors not used to such sudden swings, this can be devastating. Imagine investing in something whose value can lose 30% in a week or even in a day. Volatility isn't just a theoretical risk, it's a constant reality. And when it comes to Bitcoin ETFs, you're not just betting on cryptocurrencies. You are riding an indomitable bull. In addition, volatility can drive away institutional investors who are usually a market buffer. When they retrace, volatility can increase even more, creating a ripple effect. ETFs that promise safety and diversification actually expose their holders to the same risk as the underlying assets. The Bitcoin market, already known for its ups and downs, could become even more unstable with increased speculation, which means that the value of its ETF could become unpredictable and incredibly risky. Regulatory risks are a constant cost for any investor in Bitcoin ETFs. Regulators, such as the SEC in the US, have been hesitant to approve these products due to concerns about market manipulation and a lack of transparency. The absence of a clear regulatory environment leaves investors in the dark, always worried about the possibility of new restrictions or sudden bans. This uncertainty is not just a potential problem. It is a constant risk that can negatively impact investment returns. Additionally, if regulators decide that the Bitcoin market is too risky or manipulable, they may impose draconian rules that limit the operation or even the existence of Bitcoin ETFs. Imagine waking up to find that your investment has been frozen or limited by new regulations. The lack of regulatory clarity not only scares investors, but also creates an environment of uncertainty that can prevent the Bitcoin market from maturing and stabilizing. Liquidity issues in Bitcoin ETFs are a dangerous trap for investors. While ETFs are traditionally seen as a liquid way to trade, this liquidity can quickly evaporate in times of crisis. If the Bitcoin market plummets, buyers could disappear, making it nearly impossible to sell your ETF without accepting significant losses. This can create a scenario where, in a falling market, investors are stuck, unable to get out. Additionally, reduced liquidity can exacerbate volatility, causing large price fluctuations that further hinder trading ability. This is a vicious cycle that can devastate the value of a Bitcoin ETF and, consequently, the equity of its investors. For those who think they are entering an easy-to-exit market, Bitcoin ETFs can prove to be dangerous and unpredictable terrain, especially in times of financial turmoil. Custody and operational challenges. Custody Bitcoin is not like custody of stocks or bonds. It is much more complex and risky. Bitcoin ETFs face unique challenges in protecting their underlying assets from hacks and fraud. Digital security is expensive and complicated, and a single mistake can result in the loss of millions. Imagine a virtual vault that, if compromised, can make your investment evaporate instantly. This is a risk that many investors underestimate until it is too late. In addition, the high cost of ensuring the digital security of assets can be passed on to investors through higher fees. And even with the best security measures, the possibility of a cyber attack cannot be completely ruled out. The technology that protects the assets is also the same one that, if it fails, can lead to catastrophic losses. Therefore, each Bitcoin ETF is a bet not only on the price of Bitcoin, but also on the operator's ability to keep assets safe. Impact on the Bitcoin market. The introduction of Bitcoin ETFs can have a profound and disruptive effect on the Bitcoin market itself. These ETFs, by attracting a large volume of investments, can manipulate the market significantly, increasing volatility. If a Bitcoin ETF needs to buy or sell large amounts of Bitcoin, the market may overreact, causing price swings that affect all Bitcoin holders. This means that even those who have not invested directly in the ETF can feel the impact. In addition, Bitcoin ETFs can concentrate a large amount of Bitcoin in a few hands, creating a risk of centralization. If the fund or a small group of funds controls a significant portion of the Bitcoin market, its buying and selling decisions could have a disproportionate impact. This makes the market less stable and more susceptible to manipulation, undermining investor confidence and potentially limiting the wider adoption of Bitcoin as a store of value or medium of exchange. So, with so many risks lurking, what really lurks behind Bitcoin ETFs? Are we on the verge of a financial revolution or an imminent catastrophe? Why are regulators so cautious? And how can investors protect their assets in such an unpredictable market? Now that we know the dangers, the real question is, how far does the betting game go on Bitcoin ETFs? We are just beginning to understand what may be one of the biggest financial pitfalls of the century. What if the next market move is even riskier? Stay tuned, as the world of cryptocurrencies may be about to reveal its darkest face.